So we have Bitcoin trading right now at $104,000, putting in a little bit of a pullback. And this is following a constant pump trying to break out of the resistance levels above hand. And ultimately, it keeps getting slammed down. So we are seeing a pullback across the crypto markets over here. If you do look at the Banter bubbles, it's pretty much been a lot of chop. One day, everything is up green. The next day, everything is down red. So in today's show, I'll show you the one mistake that people keep making time and time again, and it is costing them a lot of money, specifically in terms of Bitcoin valuations, right? Make sure you smash the like button, hit the bell notification, subscribe to the channel. Let's get straight into the show content over here. And I'm just quickly having a look over here in terms of the liquidation levels. You can see liquidation levels are still pretty low. So the market's still trying to make a decision on which way things should go next. And we see this oftentimes, right? Following these mass liquidations like we've had previously over here, it does take a couple of days for price to essentially settle and then for the market to try and make a decision on which way it's going to break out next. That's usually following the big liquidations, consolidation, and then you lead into eventual expansion, right? So if we look at the DXY, there could be some hints and clues as to what may be coming up next week. Remember, the weekend price action is going to be very different to the normal weeks because low volumes and the crypto market oftentimes looks towards what the traditional markets are doing, like the S&P 500 futures in the stock market in the US. And the stock market is, of course, closed over the course of the weekend. So we have already a clue as to what may come next week. And that we can see by the breakdown over here of the DXY, the dollar index, upsloping trend line. It's dropped that momentum, right? Dropped the momentum line over here. It's also broken structure with your first lower low. And therefore, you're looking for any bounces on the DXY, which would indirectly affect crypto. You'd start to see pullbacks in the crypto market. But then that lower high, right? The next lower high over there is ultimately the dip buying opportunity on crypto, where you're looking for that trend to continue towards the downside, and that should drive things up. So just a little bit of a higher time frame overview since we're seeing this rejection over here on the DXY, and what you can expect leading into next week is probably things should still play out in favor of the bulls, despite the short-term chop that you're currently seeing within the market. Not only that, but very, very similar to what we had in the DXY over here is if you look at the DXY's trading range, of course, I've marked out a very important level over here. That is your golden pocket between the 0.618 and the 0.65. And that's where the rejection took place, right? Now, we have the same thing over here on the Bitcoin dominance chart. If you focus on the trading range specifically for the Bitcoin dominance chart from the high to the low, then we had the 786, which we narrowly missed over there. You got the rejection and the move towards the downside, and ultimately no closing candles occurred above that 0.618 fib level. Now we're coming back, retesting that yet again. So watch for a potential double top scenario over here. And if you do get that and this starts to move down, of course, altcoins should play a little bit of catch up. But for now, altcoins are getting heavily wrecked across the board. I'm sure if you look over here and you can actually toggle the currency on the Banter bubbles. If you go through there and you actually measure it in Bitcoin, it's probably going to look a whole lot worse, right? So measured in Bitcoin terms, this is pretty much what the charts look like, right? Monthly, you can see very, very few coins are up against Bitcoin on the monthly scale. Most of them have been absolutely smashed over there. So if you do get this drop over here, maybe that'll be enough to turn the corner over here for ETH BTC on a lower time frame basis, like on a daily. If we do zoom in into this area of interest for ETH BTC, you can see the wicks, right? There are wicks. There is buying pressure that's coming in. There is some demand that's kicking in right here at this exact level. But of course, as we've spoken about before, it's not enough, right? It's not enough. You need to wait for confirmation of the break above this key level over here. So you can get some low time frame earlier trigger points if ETH BTC starts to reverse. Remember, if ETH BTC moves towards the upside, that means that your altcoins are probably outperforming Bitcoin. But as long as this continues to trend down, you're getting heavily wrecked. And this is the one mistake that people keep making, right? They keep jumping into weak altcoins way, way, way too early. You need to wait for that confirmation of the reversal and the signs of strength, right? And there has been a couple of choppy scenarios like this area over here before. It looked very, very promising when this came down. You got the big spike up. You essentially broke structure, creating a higher high, only for ETH BTC to smash down one more time. And this is why if you want to wait for true confirmation, you can wait for the break of structure, create the higher high, and then wait for the next high low, at which point you have something to work with, right? Then you start to look to allocate into the next high low, and you have a hard stop below the previous lows. This is a mistake that people keep making, right? Instead, they're trying to buy the breakout each and every single time, and this is getting them absolutely heavily wrecked within the market. So there's your ETH BTC chart. Still a lot of work to do. What does this mean? It means a couple of things. Well, for one, is ETH breaking away from the prior cycles in the sense that we see this outperformance of Ethereum outperforming Bitcoin? Has that relationship broken? Well, if it goes on any longer, the answer is probably yes, that maybe this is starting to, decouple from what we have typically seen. But the more realistic answer is that probably this is a long cycle, right? And I have evidence to showcase why that would be the case. Chances are this is going to be a long cycle, very, very similar to the prior cycles. And in those prior cycles, you only saw Ethereum really outperform in the final 6 months of the cycle. So you have to ask yourself, well, if the cycle is only really going to end in November, which is what history would suggest in comparison to the prior cycles, that simply means Ethereum probably only starts to outperform starting in June. Okay, so you have to employ a lot of patience over here as this continues to draw towards the downside. And we can actually look at this particular chart over here from Timothy. He says for the past 250 days, the correlation between this bull run and specifically the 2015 to 2017 cycle, which was an absolute mammoth bull run. It was a huge one, right? Massive, massive, massive bull run. Prices ran from like $1,000 to $20,000 in quick succession. And the last 250 days, the correlation has been 90%. Very, 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 very significant correlation. What that means is if you continue to maintain this correlation, the next couple of weeks should mark price up very, very, very quickly. And you could see $137,000 in a matter of weeks, right? And then he says, before then falling back down to $90,000. That's the type of volatility that you could expect, right? So just showing it on a different chart over here with some more live feedback. Remember, these are the price cycles. We're currently in the purple cycle over here, flashing on and off the screen. Of course, we're not going to move as quick as the first cycle. Of course, we're not going to move as fast as the second cycle. Why? Because it's a low market cap and it was much easier to move price. As the market cap became bigger and bigger, of course, the correlation became stronger. So the 2017, 2021, and 2025 cycle fit most similarly. And the one that really sticks out like a sore thumb is the one that he's just spoken about over here. Last 250 days, 90% correlation. As you can see, $137,000 means if you follow the trajectory like that, you're looking at rapid markup. And this has been super significant, right? So if you do go back to the 2017 cycle, we can actually go and have a look over here just out of interest. Do we have enough history on this chart? That is the question. Only just enough history over here. You can see the ETH BTC ratio found its bottom in December and then rapidly marked up into January. This took very, very short amount of time to put in all the gains where ETH BTC completely outperformed, right? 2021 was a little bit of a different story. I guess you can mark the initial markup phase over here from about March 2021, and it completed that into May. So let's see which part of March over there. That is around the end of March. So, basically just give it April, May, 2 months. Very, very, very quick, right? Very, very, very quick gains. It happens super, super, super fast. So for the most part, people are better off being Bitcoin heavy for the majority of the cycle, unless you have the finger on the pulse and you're actually charting your favorite altcoins against Bitcoin for the longer term holds, right? There's a difference between being a trader and then a longer term investor. So do keep that in mind as we try and watch how this unfolds. So just in alignment with this, follow my cursor, as per the tweet over here, if you were to go up to 137,000 and then in a couple of weeks back down to 90,000, that would be your $137,000 mark. And then this would be your sudden drop down to 90,000, right? And then you reload and you run it one more time. So far, everything suggests that we're following the cycle to a T. And as Miles says over here, right, BTC is above $100,000, but retail interest is the lowest that it's been in 3 years. Now, this cycle has absolutely been driven by institutional adoption, and there's been a lack of retail interest, largely so because they overinvested in the altcoin sector. And the retail interest will only really drive up if the altcoins outperform. and we haven't seen sustained periods of altcoin outperformance, right? So that's looking at this chart over here. Retail investor demand over 30 days has dropped to negative 20%. It is absolutely brutal, but I'll show you the silver lining, right? There is some silver linings over there. Now, it's important to understand and to remember that the market moves through various different phases, just like you get multiple seasons, right? Summer, winter, spring, autumn, we move through the various different phases, right? You go through ranges and trends, contraction and expansion, right? And then reaccumulation and distribution. These are the various different phases. I discussed this at length in Whale School. This is actually a slide from Whale School. By the way, you guys can sign up. There's a link in the description below. Just go through over here, pause the video. I think that we only have space for a couple hundred more people to join in. We are basically at max capacity, but for those of you over here, use the link below, Whale School over there. Learn to trade like a whale in just 10 days, right? We're going to race through this course because you have to be race ready, right? Before we put in the rest of this move over here. So you'll get all the knowledge, all the information, everything is over there in Whale School. Sign up. How long is left to sign up, right? You got 4 days left, but that is while spots are still available. So just quickly going back to this slide, you have to understand that you can then divide this into more micro timeframes. And currently, we are still ranging. We're reaccumulating in preparation of the next expansive phase, right? And eventually, that phase will end, right? So you go to ranges, uptrend, right? And then range, uptrend. And then eventually, you'll go into distribution and start some sort of a downtrend. For now, there's been no signs that we're going through distribution. You can see by using the Bollinger Band width percentile, which simply shows when those Bollinger Bands are squeezing in towards one another and pinching in, then you'll start to get a drop on this indicator over here. And that is additional evidence to suggest that we're currently in a range. We're reaccumulating in preparation, at least, for the next major up move, which again, going back to this chart, would suggest that, it could be just a couple of weeks before you go to $137,000. That is if you are following this trajectory. I can even give you a more precise timeline, right? Day 879. Day 879, we'll revisit that number in just a minute. That's taken from the cycle low to day 879. I'll give you a date of when that could potentially happen if we do follow the same trajectory. So do stay tuned till the end. If you do appreciate the information, by the way, guys, smash the like button. Also, let me know in the comments what your thoughts are, right? What your thoughts on the show content. So we've got volatility recontraction, momentum oscillators are reset. They're starting to turn back towards the upside. And this is the push that we're looking for into, of course, that key level around that $137,000 zone. Now, the silver lining, I just told you, I'd tell you a silver lining, right? The silver lining is that although we have this absolutely smack towards the downside, let's go back to that. The retail interest, right? Volume is very, very low. The demand is at extreme lows with retail interest at negative 20%. The silver lining is that we're still seeing the daily exchange volume moving towards the upside. Very, very, very good sign. This is a true silver lining through this reaccumulation phase or range that we're forming on the crypto markets. Because if this were turning towards the downside, that would be incredibly worrisome, right? That would mean that this chart is 100% correct. And if there's no retail interest, and the powers that be slow down on their buying, like Michael Saylor, BlackRock, etc., what's going to happen next? Of course, no volume, no retail interest, no institutional buyers, prices must go down. So it's good news that we're seeing this. We just need to see the actual USDT being deployed, and we haven't seen that yet, right? The other good news, another silver lining that we have over here is the average M2 money growth from 𝗕𝗬𝗕𝗏 over here is 6.87%. And he says BTC is the release valve long term, right? When the M2 money supply continues to move towards the upside, you can expect that Bitcoin moves quicker towards the upside, right? So we are still seeing that expand, which is a good sign. Now, here's your trading range, right? I'm going to give you a flash of the other chart over here very, very quickly. There's your trading range. The yellow lines, right? Bottom line, top line, that is your trading range. As long as you maintain below this line or below this line, you range bound, right? Simply range bound. But if we go through to this chart over here, of course, we can see an attempted change of trend, right? We've got the lower high, the low, boom, higher high, broke the structure, didn't close any candles above here, which is not a full confirmation yet. And now the possibility of the high low in the making, breaking and holding above those key high volume areas, right? This is where your breakup structure occurred at the white line that's running across the screen over here. I know you kind of might have to really zoom in and look on that over there at 102,700. That was where your breakup structure occurred, right? So you're still closing above those tops, which is a healthy sign, which means as long as we have that volume, which is rising towards the upside, maybe, just maybe, we'll start to see a transition where the retail interest might start move back towards the upside alongside the volume, which is rising. And that would be a good sign, right? So understand, though, that the market can also be heavily controlled by big exchanges. And right now, you can see there's the max pain level, right? The max pain level is to hold Bitcoin at $98,000, right? That is for the end of month expiration. So at least the options traders, when it comes towards the end of the month, options traders, which are often mostly institutions, big players in the space, they can't buy and sell in and out of positions, over and over again on a week by week basis, the way that us retail can. That is the superpower of being a retail trader, by the way, is that you have the ability to decide at a whim when you want to jump in and out of positions. But these funds that are managing hundreds of millions or billions of dollars cannot jump in and out of positions. So they're using options to hedge against the trade, right? Now, the options markets are massive. Sometimes they're bigger than the spot markets. And consequently, the options market makers have the ability to sometimes use other tools to suppress price or to increase price to move into the point of what they call max pain. The max pain price is the level where the majority of options traders will lose their money, right? Where most options, because options is, you have the option to basically buy or sell the asset at a specific price. I don't want to confuse you over here. You can look at the Investopedia definition, but basically the majority of options do expire worthless, right? You have to nail the exact price and you have to nail it at the exact time in order to be able to cash out your options in profit. Okay. And the majority of these will expire worthless. There's a worthless price where most of them will lose their money, and that's $98,000. Oftentimes we'll see price being suppressed into that level. So you might see continuation of this chop, right? Price might come down towards the end of the month and close at that $99,000 mark. So do pay attention to that. If you are a highly leveraged trader, expect that if you do come back down towards that mid-range level, because we can actually mark it out, right? Markets range and markets trend. And if we do mark out this level as a mid-range, where does it line up? Well, exactly where that options expiration is. The mid-range is coming in at $99,244. And we are going to print the bearish moon. More on that next week, which is why you must subscribe to the channel. So if you do see a bit of a pullback into this zone, just make sure that you're not going to be annihilated on your altcoin positions, right? The breakout, although we want this to happen now, may not actually take place until, maybe another 2 weeks time, right? So you might put in a bit more of a pullback, get the options expiration at max pain, which we so often see, and then reaccumulate. Now, the big mistake that you'd be making is by trying to, get into altcoins based on this breakout over here without full confirmations. That is one of the big mistakes that keeps destroying your crypto portfolio. So wait for the confirmation of the breakout, or wait for a lower level with a beautiful high-low structure over there, which means going back on this chart, yes, theoretically, you could still come back, right? So let's pull out our highlights over here. Theoretically, you could still see something like this. If it is failed, you might still come back down. This is still your high volume node area and would still be your macro high low, right? So you got your major high low or your major low over there. And we're looking at this as a possibility of a high low. But if it comes back down over here, that's still a high low. When you look back in hindsight, when price is eventually trading back above here, this will have been an obvious high low. It just doesn't feel like it in the moment because it is super choppy market behavior. So 4-hour chart, price is pulling back. We can always get a little bit more granular because there's a lot of moving parts when it comes to trading. So on a more granular level, this is the sweet spot. We have been finding support at that 50 EMA. But remember, the EMAs and the EMA crossover here between the 50 and the 200, trend traders would use this, and they would basically be looking to buy every time you hit that 50 EMA, which is what we're seeing. But the question is, Are we in a range or are we in a trend? I'll go back to this over here. Where are we? Are we in a range or are we in a trend? I think it's definitely much more obvious that we're currently still caught within a range, but we could possibly be about to transition into a trend. Again, guys, I do cover all of this in Whale School. I'll help you to identify and see the transition from ranges to trends and how you can actually, utilize the right trading strategy at the right time and capitalize on the transition. Please do use the link in the description below for that if you do want to join. All right. Now, getting a little bit more granular, looking at the hourly time frame, we have seen these bullish pennants, right? A bullish pennant also covered in Whale School. If you do want that information, it is there. It's pretty much a symmetrical triangle with lower highs but higher lows, and we can look at what the funding rate is doing in the midst of that. The funding rate is pretty low, so I would still leave the possibility that maybe going into next week, there could be the possibility of a breakout. If you continue to draw down over the course of the weekend, you're probably going to find support over here at about 102,654, assuming you follow the trajectory. Watch the funding rate over here, which shows the willingness of market participants to open up leverage long trades. Okay, watch as this continues to contract. If it comes down really, really low, showing that, everybody is a hero until you actually reach support and you have to take a trade at support. For some reason, most people bail out at support and they buy resistance. I don't know why. I guess the psychology is very, very strong. And there's a big magnetic draw at those levels, but you should be looking for longs at support over here. So, but because most traders get it wrong, what you'll see is you'll probably see the funding rate will start to drop down quite aggressively, right? Here's your primary example. Let's go back over here. Look at this. You should have seen the funding rate go up here, opening up leverage longs over here. Why? Well, because you're coming into a supporting trend line, right? But instead, you can see what happens is the funding rate drops. Funding rate drops, price holds there, some smart money gets in, you get the move up, right? So we'll watch over here. That's your one bit of short-term hopium. Watch for the drop over there, the reset, come into this zone over here. And then as you attempt to break out, watch the spike. If you do get these huge spikes like previously, that might be a sign that you're going to get a little bit of a flush. But again, it all comes down to that confirmation. If I saw something like this and was holding up and the funding rate was pretty neutral over here, that would look good, right? That would look good to start to load up. And then you might start to get that actual breakout. So if you do want to take the leverage trade, if you are a low time frame trader, or even if you want to buy a spot for a long-term portfolio, I also want to let you know that one of my favorite exchanges in the whole world to trade on is Blofin, right? They're giving you a 50% cash back on your trades. Remember, every single exchange in the world will charge you a fee, a maker and a taker fee for trading. Those fees add up over time. They're going to give you half of that money back in the form of USDT. You can withdraw it, you can trade with it, you can do whatever you want with it. There's a link in the description below that will take you through to Blofin. Do sign up while you still can. This is a no KYC exchange, right? So the beauty of that, you don't have to give in any of your personal information, no ID, no passport, your child's birth certificate, where you live, none of that, right? And on top of that, they have fire blocks, which is, long story short, probably the safest way to store your crypto. So no chance that the exchange is going to steal your money. All right, moving on. The chop continues on the USDT dominance. As long as this does continue, expect that crypto cannot run, right? Crypto cannot run until we do start to break down below the major supporting level over here. So similar to what we've spoken about previously in terms of waiting for the confirmation, if you want to start to get heavily long on altcoins, wait for the confirmation of acceptance being gained under the bottom of the range over there, 3.79%. USDT dominance breaking down means all that money is going to flow out of Tether into the crypto market, right? That's the only definition of how this would actually go down. And that should line up really, really nicely with the DXY breakdown and the Bitcoin dominance breakdown at the same time, right? So we'll keep an eye out on that. So the other mistake that people are making is that they're not managing their risk. Sometimes when it comes to trading, it's not always about the technical level on a chart in terms of, have you gained a level or lost a level? This is a question that I often tell people to ask themselves, right? So, for example, if price does come down into technical support over here, yes, theoretically and technically, that's a buy, right? In the mid-range, you're hitting that level, that is support. But you have to always ask yourself the question, which is, what is happening with your portfolio? the percentage gain required to recover a percentage loss, what I call the drawdown death trap in Whale School, is this. As you lose more and more, the gain required to get back to break even becomes more and more exponential. What that means is if you lose 5%, you need not 5% gain to get back, but 5.3% gain. Let's fast forward. If you lose 25%, you don't need 25% to get back to break even. You need 33.3%. What happens if you lose 50% on a trade? You're on a leverage trade right now. You might be 50% down. If you need to get back to break even, you need a 100% gain, right? You need to double your money. 50% down equals 100%. And now you're back to where you started. What about when you're talking about down this side over here? If you get to 90% down, you need 900% gain, 900% profit, and you haven't made any profit. You're just at break even, back to square one, right? This is the importance of understanding the drawdown death trap. And most of you in crypto want to cap this somewhere around the 15 to 20% level, right? You don't want to go beyond that. But it dives in much further, right? The risk management of trading can go a lot deeper. It's beyond the scope of what I can cover in this particular video. This is a live video. Happy Saturday. For those of you who thought this is a pre-record, happy Saturday. Smash the like button, guys. I'm bringing you crypto love and wisdom over here on a Saturday. I'm trying to add value to your lives. So please do smash the like button. It goes beyond the scope, right, of what I can cover on the Saturday video. So you do need to come to Whale School if you want to dive deeper into this, but it's all about calculating your position size. There's a very specific way in which you calculate your position size to ensure that you never, ever, 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 ever go beyond those 15 to 20% losses. In traditional markets, I would usually say 2% loss because there's less volatility and it's harder to make the money back. But in crypto, you can push it to an extent to around that 20% mark and you could still recover, right? So this is a big mistake a lot of you make. You're jumping into altcoins and you're losing value against Bitcoin and against USDT, right? Be very, very, very careful. Manage your risk out there. So one way that you can do that pretty easy is you can just look at how it performs against Bitcoin, right? So this is just to make it quick, right? You can do this on TradingView. You can trade. The TradingView is a little bit slower than this. So I figured this is just the easiest way to showcase. But simply just looking at Ethereum against Bitcoin. So if Bitcoin is the standard that you're measuring against, ask yourself, is ETH in an uptrend against Bitcoin? And the answer is no, right? In 2020, yes, it had this massive uptrending move again. Here's 2017. I just want to remind you, it bled all the way down into this region over here. That was around the 26th of December, 2016. And then that's where it started to outperform, right? So pick your poison, right? Pick whatever chart is that you want to have a look at. Here is Solana against Bitcoin. Now, this one's been interesting because this one's been range bound, right? This one had a massive outperformance, then it underperformed, then it outperformed, and then it ranged, possibly reaccumulating in preparation for the next big move up, right? So that is Solana, but you can go through the list, right? Doge, how's Dogecoin done? Dogecoin over time. Has Dogecoin outperformed? Well, here's Dogecoin. Dogecoin has one massive outperformance, and then it basically just bleeds everything out. These are probably just lower highs, lower highs, lower highs. So chances are that this is probably going to continue to go towards the downside. So these are things you need to be careful of. Let's go have a look at a couple of others. Tron was doing very, very well at one point, but most of the money will eventually flow back to Bitcoin, right? So Tron bled, had a massive outperformance, bled, had a massive outperformance, and then a slow bleed. Over time, you don't want to be holding altcoins for too long, right? Altcoins are shorter term trades to accumulate more Bitcoin. Over time, you want to mostly be Bitcoin heavy or even in a cash position. So do keep that in mind. Now, there's something that I forgot. We need to go back over here. I said that I'd give you a date. So let's quickly go to it. We said, if you did follow this out, right? I'm sure some of you are sitting here in anticipation. So when $137,000? Well, if we followed our 2017 cycle, how long would it take? This is, again, massive, massive speculation. Chances are that it's not going to follow to a T, but if it rhymes even slightly, we might get a little bit of an indication of how long it takes to get to $137,000. Let's say day 879. Let's go back to our other chart here where we've been pretty much timing these things to perfection. Let's just remove that. Let's turn this off so it doesn't move around too much. And let's grab this tool. So there it is. Okay, back onto this chart, double check. So we're looking for day 879. Day 879 from the bottom would be over here, right? I'm just going to add a couple more days because there's day 850. There we go, day 850. So we need to add 27 days, right? 27 days. That would take you to the 4th of April. So the 4th of April, we're going to add that in, grab our vertical line. Okay. 4th of April would be $137,000 if you follow the trajectory, right? Which means you could continue to chop and range. So just understand, if you were to follow, if we break out now, we're going to be moving too quick, which showcases to you that there is really a real possibility that this sideways chop just continues, right? And you can extend this trading range. This sideways chop could continue. And when you break out of here, you know, very quickly will it start to reach that level. Food for thought, right? Just some food for thought. I'm not saying that's happening. I told you this is wild speculation over there, but it is something to keep an eye on, right? So here we have Solana. Solana currently in a, a bullish pennant. You got your pole, you're coming into the pennant over there. You're currently putting in the high lows, lower highs, very, very similar to what I just showed you on Bitcoin on the super low timeframes on this particular chart. That is Solana. Let's continue to monitor and watch what happens at this area. This is on a 4-hour time frame though. So there is definitely some work to be done. Watch if buyers step in and defend this 242 level. If they do, I would expect that next week should be good for Solana at least, and you might see a bit of a breakout. If you break below this level and there's low volume over the course of the weekend, there's a real possibility you're coming back down to 216 on Solana. So please do keep an eye on that. Remember, I do cover all of this in the Whale Discord. So here's everything. There's your pennant, right? I have been updating every single step of the way. I made my recent update on Phantom over there. ETH has got the inverse head and shoulders over there. This could take time, right? You could see continued chop over here on ETH before that plays out. So if you do want to jump into Whale Room, remember, we have a whole bunch of different lounges. We now have the meme lounge as well. For those of you that are into your memes, we got all of our meme coin trades as well. Let's quickly actually double check on how Goku is doing, because I've seen you guys in the chat. Goku tried to break out yesterday. Looks still strong, still holding up over here. It's just a matter of time. Imagine when the strength comes back into the rest of the market, really grinding into this level over here. So I would expect rapid expansion over here very, very, very soon for Goku. All right, let's see what else. Let me know in the comments if there's anything else that you guys want to have covered today. This is already with 32 minutes in. 32 minutes on a Saturday. This is what you'll learn in Whale School, by the way. For those of you that want to know, risk management, support and resistance, candlesticks, chart patterns, ranges and trends, moving average strategies. We'll go through the market cycles and how you trade crypto in relation to where we're at in a broader market cycle. We'll look at portfolio structuring and when you should have a large portfolio versus a small portfolio, liquidity, you know, how market makers thinking, how they're manipulating price, and how you can visualize this on a chart and execute trades around it. We'll look at volatility. This is diving into the Bollinger Band with percentile, as well as average true ranges. And then we'll look at the most important of all is trade execution, right? Trade execution, that is in there. So sign up, use the link in the description below, jump into Whale Room if you do want to. I think that is it. Let's leave it at that, guys. We'll save the altcoin requests for next week. Thank you all so much for joining. Appreciate each and every single one of you. I will catch you on Monday. Have a great weekend, and cheers for now.